Hey everyone, Sam here. Let's get started. Good to see everyone. So these short supply and demand sessions we will be doing these for a while, Monday through Thursday, 4 days a week. And again, good to see everybody. We did one last week, and again, we'll do them the next 4 days in a row. We'll do these Monday through Thursday for a while. You should be able to see the screen. Sound should be fine. And all right. I think we're good to go. Okay. There we go. Sorry about that. The reason we started these, the main reason we started these is because there are so many supply demand kind of copycat organizations, people and stuff out there, and we just get so much feedback, people that coming to us to the Pinnacle Institute, that they're confused. They say this person does it that way, that person does it this way, and so on. There's a lot of people out there teaching and talking about the supply demand strategy that never traded it. So we thought, let's do some of these sessions and get a focus on the original supply demand strategy. I developed it many years ago back on the trading floor of the Chicago Mercantile Exchange. We'll talk about that in a bit, and we'll get to a new lesson each day and examples from either that day or the prior few days, depending on what the market did. And let's get going. Again, great to see everybody. Let's move forward. We always start our sessions with a thought of the day. If you've never heard of what you see on the left side of the screen here, Kintsugi, it's pretty neat. Just a good little thought. We start our trading sessions each morning with not these YouTube sessions, but our live trading sessions with a thought of the day. And always good to start the day out with an important thought that helps move life and things forward, right? Never be ashamed of a scar. It just means you were stronger than whatever tried to hurt you. So that's a good thing. We're always stronger in places we've been broken. Just like identifying a flaw in your trading strategy, right, often becomes a key strong piece of that trading strategy. Let's move forward. And these sessions are meant to be quick, 10-minute power lessons with real market trading examples. Remember, we are not investment advisors. I am a fund manager, but the Pinnacle Institute is not an investment advisor. And certainly there is no guarantee of success when it comes to risking your hard-earned money in the markets. In fact, available research does strongly suggest that most active traders lose money. And I've done YouTube sessions on that before, right? So if the majority of people speculating in the markets lose money, it's important to talk about it, right? Everyone wants to talk about making money. Well, for some people, it means stop losing money first. So make sure you understand the risk and how to deal with risk and all that. No one's pushing anyone to rush into all this. Take your time and make sure you know what you're doing. All right. So again, if you don't know who I am, my name is Sam Seiden. I developed the supply and demand strategy back in the 1990s on the trading floor of the Chicago Mercantile Exchange. It is a 100% rule-based strategy. The strategy helps quantify supply and demand in all markets and all time frames, and identifies key supply-demand imbalances, which helps us forecast where prices are going to turn and where they're going to move to. Right? All right. So let's start right here real quick. Make sure everybody understands just pure supply and demand and how it works. Remember, okay, the reason why we have a trading range, for example, like what you see in the middle of the chart here, and this could be any time frame. This could be from a day trading perspective, a swing trading perspective, a longer term investing perspective, a hedging perspective, right? And anything in between. The reason why you have the range is because above that, the price levels above that, there's a significant supply-demand imbalance, right? And that's why you have all these pivot highs here. Just like below that, the reason why you have the bottom of a range is because there's a significant supply-demand imbalance down here on the demand side, okay? The vast majority of trading activity or trading volume will always be in the middle, which we call fair value, which is where the majority of buyers and sellers agree to buy and sell, right? And again, the lack of a significant supply-demand imbalance in the middle, which is where I'm pointing now, is why we get all this trading activity here. The reason why we get so little trading activity out here is because the supply-demand imbalance on the supply side is so large. And down here, the reason why we get so little trading activity is because the supply-demand imbalance on the demand side is so large. What I did when I developed the original strategy was focus on seeing what this looks like and this looks like only on a price chart, nothing else. I didn't focus on anything else, okay? So now I want to take this core concept of supply-demand and focus on a specific lesson for today's session, profit zone. The screenshot on the left, these are right out of the live trading and analysis sessions we held with our members. Here we had a qualified supply zone with a significant profit zone below. You can see that's that zone right here, okay? Now I want you to notice below the supply zone, what we have, right, is a cluster of trading activity, a range, which again, we know in a range, there is not likely to be a significant supply-demand imbalance. The other key thing I want to make sure you're aware of is these pivot lows here are not demand zones. These are not demand zones, period, right? Pivot lows, just like pivot highs, are not demand or supply zones. Instead, they open up profit zones like you see here. And what you want to do is you want to look at pivot highs and pivot lows and think of them as your fingers, okay? The pivot lows here are your fingers pointing lower. And what the pivot lows are saying is look lower for your qualified demand zone, okay? Just like pivot highs would be pointing us higher to the qualified supply zone above. So while the supply zone here may not look like anything special, right? It's certainly qualified. It met our structure and location criteria. The profit zone with it was substantial, right? And it's because of this range that we just discussed on the prior screenshot. And I want to point your eye to the fact that pivot lows are not demand. Instead, they actually open up profit zones to the downside. If we look at some trading opportunities from the past few days, here going into last week, we identified a high probability demand zone here in the Russell. Notice the profit zone up to supply. And then when price reached the demand zone last week, okay, notice the trading activity right here. Okay, again, this right here represents this right here. Price should have an easy time moving through this because there's a lack of a significant supply-demand imbalance, right? Price reached our high probability demand zone or real demand zone there. Competition to buy at demand caused price to turn and pushed it higher. Another trading opportunity that's been playing out over the past days is the decline in price. And this one's a good one for profit zone as well. Notice the NASDAQ, right, rallied up to our qualified supply zone. And I say real supply zone and real demand zone here because there's so many people out there that put out supply and demand zones. And a lot of those zones are not supply and demand zones, right? Again, so many people over the years now have twisted and changed the rules and added this and added that. And, you know, now it's a big confusing mess. So we thought, again, let's bring it back to what's real. And anyway, we had this supply zone. Now, notice this supply zone and notice the trading activity down here, right? Okay. Some fair value down here at the time. And again, a lack of a significant supply-demand imbalance here. Look at all that trading activity, just like the screenshot I showed you a few minutes ago. Notice how far, in this case, the supply zone was, meaning it was higher probability and came with a larger profit zone. When price reached our supply zone, where our members had the opportunity to sell short if they wanted to in the NASDAQ, right? Competition to sell at supply, which is what it is, caused price to turn and pushed it lower. The fact that we have a lack of a significant supply-demand imbalance opens up the profit zone to the downside. Notice price goes through here 1, 2, 3, 4 times. It should have no problem going through there over here. Does that make sense? Okay. The next one, this also has played out over the past few trading days. So we looked at the Russell, we looked at the NASDAQ. Let's look at an individual stock here. Again, we can apply these supply-demand rules to anything, any market, right? Any asset class. Here we had, again, a demand zone sitting below all of this trading activity, okay? Price makes a new low here right into the qualified demand zone. Competition to buy here at demand causes it to turn and pushes it higher. But again, notice this middle stuff here. Price should not have a hard time going through some of that, right? Now, when price did go through there, right, a session that we held with our members a little bit later, at that point, we had a qualified supply zone up here. And again, the distance between demand and supply, right, demand and supply, that's the profit zone, or sometimes the initial profit zone. Does that make sense? Okay. Another word for demand and supply, wholesale prices and retail prices. Buy zone, sell zone. This is just putting pure supply and demand to work in the markets. Okay. Remember, let's look at one more here. So this is Microsoft. Microsoft had a nice rally this morning, and that's after last week coming down into our qualified demand zone. Price came down here a couple times, didn't actually touch the line, touch the demand zone, and that's probably because the competition to buy here or the imbalance was so big. But then a couple days later in the week, later last week, price did actually go into the demand zone and turned higher. And then today, Monday morning, gap up and price moved a little bit higher. But notice this big range right here, okay? Again, this is that whole profit zone area that I was speaking of. All price did was dip below that range into a qualified demand zone, right? And pushed it back higher. Remember, the imbalance below that range is typically significant, high probability, right? Fair value, which is where the majority of buyers and sellers agree to buy and sell, just pulls price back to that area. Okay. So again, these sessions are meant to be quick and impactful, all focused on the original supply-demand strategy to help everyone with any confusion they may have. Never forget the movement of price in any and all markets is a function of an ongoing supply and demand relationship. Price turns at levels where supply and demand is out of balance, right? Managing risk and return on investment opportunity is present when this simple and straightforward equation or relationship is out of balance, right? And that's why, again, the strategy in its purest form, the original form, helps quantify supply and demand in any market and any time frame to identify those imbalances to help us forecast market turns and market moves. Hopefully that was helpful. We'll be back at this tomorrow with another mini lesson and a focus on the original supply-demand strategy and more opportunities from possibly today and last week, like we just went over. All right. Good to see everyone. Have a great rest of your day.